Hey traders, today we're going to talk about a pretty simple way to follow bond futures, interest rate futures. Really good trade right now, especially because the Fed is moving. When the Fed starts moving, bonds or interest rates, if you look at it as a yield curve, 2s, 5s, 10s, 30s, ultra, as the Fed moves, the shape of the yield curve changes. So it's very, very important for anybody who has risk in bond futures to not only look at the ZN, the 10-year, or the ZB, the 30-year, you want to look at how things trade relative to one another. So in front of you, I have something called the ZB butterfly, the 30-year butterfly. ZB against the ZN against the UB. ZB is the 30-year, ZN is the 10-year, and the UB is the ultra. So what we're looking at in this chart is we're looking at the value of the 30-year future contract, the ZB, and how it relates relative to its neighbors on the yield curve. So when it's up here, the ZB is very strong relative to the 10-year and relative to the ultra. When it gets down here, the ZB is very inexpensive relative to the ZN and relative to the ultra. Lots of different trades you can do from here. But let's keep it really simple. And instead of talking about relative value trades or spread trades or pair trades, something that might be a little bit more complicated, let's just talk about outright trades, just trading the ZB future. Right now, we could tell from this chart, and it goes back about 10 days. The ZB in that 10-day period is relatively weak to its neighbors. That's why the butterfly is trading down here. So what does that tell us? Well, if you're just trading the ZB, we know definitively the ZB is inexpensive to its neighbors. If you are trading the ZB, you should only, let me repeat, you should only be trading the ZB from the long side. If you think the ZB is going to go lower, you're better off selling the ZN, the 10-year, or the ultra. Don't sell the ZB, even if you think it's going lower, because we know from this chart, the ZB is definitively inexpensive relative to those other two contracts. So now let's go look at just an outright ZB chart. And here we have it. We're just looking at the ZB all by itself, the 30-year future all by itself. And this data takes us back to May 1st, 2016. Whenever I'm doing technical analysis, I want the most amount of data first, and then we can drill into smaller and smaller time frames. So what do we see from the ZB? Here's what I see. We have the 100 period moving average, which is just an average of the last 100 bars. This is the 200 period moving average. All the 200 period moving average is, it's an average of the last 200 weekly bars because we're on a weekly chart. If you go back and just use a common sense approach, ask yourself, does the market know these moving averages? Does it bounce off them? When it goes through, does it trend? Does it follow through? So down here, the first time it goes through, it definitely knows the 200, right? It looks like it's an actual floor that it comes down and it bounces, comes down and it bounces, stays around, and then finally goes through its resistance and then sells off. So I think that we could probably agree that this market certainly knows the 200 moving average. What about the 100? It gets through, resistance here, resistance, doesn't really touch it, resistance, sells off, gets closer and closer. Now it's right on that 100 period moving average. Now throughout my 20-year trading career, I've realized and I've started to gain confidence that markets don't like to stay around big levels. A big level in the ZB outright future is the 100 period and the 200 period moving average on a weekly chart. So right now, the ZB is at the 100 period moving average. I personally don't think it's going to stay there. I think it's going to get away from there pretty quickly. If you think the market's going higher, you want to get long ZB because we know from the previous chart that the ZB is inexpensive relative to its neighbors, the 10-year and the UB. On the other hand, if you think that the 30-year interest rate is going to go higher, that would mean the futures trade lower. They move in opposite directions. So if you were bearish to ZB, I wouldn't sell the ZB with your enemy's trading account, with anybody's trading account, because the ZB is inexpensive. If you think it's going lower, you're better off selling the ZN, better off selling the UB. Just don't sell the ZB. The ZB is a great candidate if you're bullish the ZB future and you think interest rates are going lower. I personally think that ZB is going higher. Outright traders, I think it's an excellent trade to play the long side of the ZB right here and try to make a whole bunch of money, capture a big move, and then a little bit of risk. Maybe stop yourself out if we get under last week's low in the ZB. Hope that helps. If you have any questions, leave a comment below. I'll make sure I respond to each one of your questions. Thanks. My name is Jonathan Rose. I'm the owner of Masters in Trading.